Yo, brah, it's lit to be making coin. Translated for you older folks, we'll help young adults make $1 million. Then, are your investments well diversified? We talk about what alternate investments are. And is probate required when settling an estate? Find out. All this and more today on The Wealthy Life. What is the number one thing teenagers need to know about finance?
I honestly think schools should be teaching kids a lot more about taxes, about finances, about the practical things. I think we teach a lot of abstract things in school. We don't teach enough practical things.
Just start working and save for like when I'm go to school.
You need to work. Honestly, you need to work to save.
I think if you show them that you putting away $20 a month can return to $1,000 a month in 20 years, I think they'll really understand that part.
Would you like to make $1 million? Today's guest is Jack Fletcher, a young man beginning his career and looking to make smart money decisions. Jack, welcome to the show.
Thank you, Sybil. It's really great to be here.
Jack, tell me your story. Who is Jack Fletcher?
Well, I kind of dabble in two different industries. I'm currently an insurance advisor right now, and I'm also an actor.
Those are two completely different things. How's that work out?
Really great, actually, because one is a very secure and, 9-to-5 job, and the other one is a very high risk, high reward, but a lot of high energy and great results.
So one pays the bills and the other you have fun at?
Absolutely.
But maybe you have fun at both.
Try to.
Why acting? What piqued your interest?
I like to, you can kind of do anything as an actor. I mean, if you've ever been interested in playing a lawyer or you wanted to be a judge or something like that, you can do pretty much anything. You can be a firefighter. You kind of get to try this whole wide variety of things and really fit someone else's skin.
That is a great perspective. I never thought about it that way. So it's like getting many careers throughout your lifetime all at once.
Yeah, if you're unsure of where you want to go, it's a great place to start because you'll pretty much do it all.
Now, in the insurance industry, what type of insurance do you focus on?
Auto insurance, travel insurance, home insurance, condo insurance.
There'd be a lot to learn in that area.
Yeah.
Are you finding it overwhelming, rewarding?
Rewarding, very nice. It's a lot of hard work to, learn the ins and outs of the industry, but it's also very rewarding when you're able to engage with a client and really get to know them much better on a personal level.
Now, what type of hobbies do you have outside of work?
I enjoy recreational exercise, as well as automotive. I'm a big car enthusiast.
Oh, now that's an expensive hobby.
Yeah.
What does that entail?
I've currently got 3 vehicles, so it's becoming to a point now where starting to run out of garage space as well as
money.
Yeah.
Yes. So what are these vehicles? Do you drive them all, or do you fix them up?
It's hard to drive 3 vehicles at once, as you might know. But my first one's just a vehicle I've had as my daily driver, and then I bought a convertible this summer for that exactly.
Yes.
And then
fun.
Recently my grandfather passed down a 1966 Mustang to me.
Wow.
Yeah.
You are a lucky guy. So do you get a good deal on insurance, working in the insurance industry?
They can't cut us any deals. That was my first question in the interview.
Yeah, it didn't work. Did you have any good role models in your life growing up when it came to money?
My grandfather was a great financial advisor. I mean, he made a lot of really smart financial decisions. He was a great provider. And he taught me a lot of what I know today about making smart investments as well as trying to diversify.
Oh, that's a special relationship to have. What type of investing did he teach you?
Mostly in really safe and long-term investments. So thinking for a future goal rather than a short-term gain.
Oh, that's great.
Yeah.
Anything pop out in your mind that you remember investing in?
Yeah, him and I both kind of took on different stock markets where I would bring portfolios where I think maybe something would work, and he would kind of research more and tell me yes or no. So a couple of the ones that we went in on were Disneyland, as well as Nike.
So you earlier said low risk, but you're thinking long term. And it's interesting you said that, because when it comes to good quality blue chip stocks, short term, they go up and down. They're not low risk.
Yeah.
But over the long run, they generally prevail and they're sustainable, and that's where you get the higher returns.
Yeah.
How did you feel going through some ups and downs in the markets over the years?
It's a little bit nerve-wracking, especially when you see it from a high to a big low, where it's a major dip, if there's some sort of PR stunt where it goes really horribly wrong.
Yes.
But generally speaking, they recover, and you can notice he showed me in a 5 to 10 year span, you really don't see a drop. You're usually seeing a steady increase.
Okay, so you've got a really good foundation so far. Jack, what's your big question for me today?
Well, as a young professional, what is the best way for me to grow my money and let it work for myself?
Fabulous question. Don't go away. Learn how to invest wisely after the break.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. We're here with Jack to learn how to make $1 million. Jack, does $1 million sound okay to you?
You know what? In the grand, yeah, I guess, yeah, that'd be all right.
It'd be okay.
Yeah.
What does money mean to you?
Financial security, as well as being a provider. Just freedom to do the things that I want to do, but also, be able to give what I don't need, not to be too self-absorbed in it.
To help others.
Yeah.
That's a good thing to say. Everyone wants to put a roof over their head and food on their table.
Absolutely.
Maybe drive a few cars.
If you can.
And have some insurance.
Yeah.
You need to have insurance.
It's advisable.
But then to help others, what types of charitable initiatives pique your interest?
I've started to get more into environmental stuff. So my partner is big into the environmental community. She has her own nonprofit organization she runs, so I help her out with that. And that's been really eye-opening to me because it wasn't something I really looked at too much. I was aware of it, but wasn't really putting much effort into finding out more. So she's really taught me a lot more about, how much damage we're really doing and even small things we can do to help.
You seem quite mature for a young man. You've got some good investment basics thanks to your grandfather. You've got this heart to give back. I think you'll be okay. What are some of your personal short, medium, and long-term goals?
I would really like to have my own property and to try and be as mortgage-free as possible, because that's the one thing dealing with clients on a day-to-day basis, and even family members who tell me being mortgage-free is the greatest thing they've ever had in their life, pretty much, next to their children.
And so to do that, you need to make money, and you need to invest money, and you need to pay off debt, but you maybe don't have the debt yet because you haven't bought your house yet.
Yeah.
You need a down payment. That's what we need.
We need to be in
debt. A
debt.
down payment. Do you think it's reasonable to save at least 10% of your income?
I'd say that'd be reasonable, of course.
Great. Well, the reason I ask that is I think everybody needs to save at least 10% to plan for their future. Earlier you talked about longer term investing and investing in the stock market. I just want to give you an example of what 10% of your income might be able to do for you. Mm-hmm. If you could save $400 a month for the next 40 years, and I know 40 years sounds like a long time, but that will take you to retirement.
Yeah.
You're young right now. If you invested ultra-conservatively guaranteed investments at 2% a year, that $400 a month would grow to about $300,000.
Oh, wow.
Not bad. But if you were able to earn 5% on that money, same $400 a month, it's going to grow to $600,000.
Wow, so doubles.
And if you invest more in a growth portfolio with a diversified portfolio of stocks and can earn an average of 7% per year over the long run, that 40-year time period, guess how much your $400 a month will grow to? $1 million.
Oh, wow.
So it's doable.
Yeah.
And as you start making more money in your career, you'll be able to start saving more than $400 a month. Ideally, even shoot for 20% of your income just to go into savings.
Yeah.
And that way you'll have enough money to save for your retirement, as well as some shorter term goals, like maybe insuring those cars, and some medium term goals, and helping the environment all at once.
That sounds pretty good.
Jack, thank you so much for being on the show.
It's been a pleasure. Thank you so much for having me.
And stay tuned. Up next, we'll learn what you need to know about alternative investments.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Learn how to invest like the high net worth people do. With us today is Andreas Camacho, an institutional portfolio manager with a focus on alternative investments. Andreas, welcome to the show.
Thank you. Very nice to be here.
Tell me a little bit about your background. How did you get interested in money management?
Well, I think I first became interested in how to make money. So it brings me back to when I was a kid. I was very, very much into sports. So I had my prime interest was mountain biking and golfing. And then I was part of different teams in school. So it came to a point where my parents finally said, well, Andreas, we love you, but you know, we don't have an unlimited budget for...
This is expensive.
Yeah, this is getting expensive. So you're going to have to come up with a way to finance your affinity for sports. So what they offered was, if you earn $1, we'll match that dollar.
What a great idea.
Towards anything sport related.
Wow.
Yeah, so then I had to come up with a way of making my own money.
So you did?
Yeah, so one of my best friends growing up and we identified that after school, all those sports teams would be done practice, and there was nowhere to buy a sandwich or a drink or a power bar. So we said, well, if we sell that after school, there's no one else selling it, so we have a captive target market pretty much.
Brilliant.
Yeah, so we had quite a bit of success, and we started selling sandwiches, power bars, energy drinks. So within short order, we were like, okay, these margins are nice. We're going to keep doing more of that. So that was when I first started learning how to make money.
What a creative thing to do as a kid.
Yeah.
And then, obviously, at that age, though, you were just earning the money to spend right back on sporting equipment.
Yeah, exactly. But after a certain point, you're like, okay, well, I'm fully stocked up. So I started saving the money I was making. So that's when I started learning on how should I be managing that money. And I was thinking, well, I need to grow it because I want to travel before going to university. And I just became more interested in learning the business, the business aspect of investing in companies. And then
your post-secondary education?
Yeah, so I formalized my interest in investing and in business management, so to speak. So I studied finance, and then I pursued my Chartered Financial Analyst designation, and that pretty much rounded me very well as an individual to be a portfolio manager and help people manage their money, grow their investments, and save for their goals.
Now, I understand you have a little bit of a different focus. The average portfolio manager tends to invest in stocks and bonds, but you also incorporate something called alternative investments. Yeah. What are alternative investments?
Alternative investments are all those asset classes that are not traditional investments like stocks and bonds. So you can think of infrastructure, real estate, private equity, venture capital, futures market,
so it's
hedge funds.
It's basically all those things outside of just regular old stocks and bonds.
Exactly.
So infrastructure, expand on that a little bit. What is that, like roads and buildings?
Yep, exactly.
And hospitals and...
Well, hospitals and buildings would be part of real estate.
Okay.
Toll roads, water treatment plants, that would be infrastructure. Typically invested by pension funds, by ultra high net worth individuals, endowments.
Okay, so people with the money have typically always invested in alternative investments, but how about the average investor? How do they get into this? I mean, I can't just go out and invest in a highway.
Exactly. So I think there's been a major push towards alternative investments in the last 10 years, especially by the very sophisticated portion of the investment community. So pension funds, U.S. endowments, and they have achieved really attractive rates of return with less risk. So now these are being rolled out into more ways to invest for the average investor.
So how does the average investor then get invested in this sector?
Well, they can do it themselves if they have a lot of time to dedicate for due diligence and finding the right managers and doing everything that an investment manager would do.
Yes.
The problem with that is that not only do they need to qualify as qualified investors to satisfy a regulatory rule.
So they have to be a sophisticated investor, which generally means $1 million or more of net worth. Is that
exactly,
the same
yeah.
thing?
Yeah, it goes by net worth or income in the previous 2 years.
So if you don't meet that criteria, can you still get involved?
Yes, you can. So now there's investment companies that have provided, even through a fund of funds or through direct exposure, they have provided the investment vehicles for people to actually participate in these investments. So you can participate in anything from certain real estate development, venture capital, private equity, through 3 or 4 different vehicles. And
Great. It's kind of like a mutual fund
Yep.
that's well diversified, so you're not just putting all your eggs into one basket.
Precisely. And the most important part of that when you talk about alternative investments is that they're sometimes not the most liquid of investments.
Right.
So if you do it yourself, you have to be able to account for the fact that you may have a life event happening and you cannot tap into the liquidity of your investments.
You can't sell it. You're stuck there for a certain amount of time.
Exactly. Be either within a lockup period, if you're talking about private equity or venture capital, or through just being illiquid because you own part of a building, so you can't cut off, the
rest of the owner, yeah, you can't just
Yeah.
sell out instantly.
Exactly, yeah.
So what you're saying is through this more of an investment portfolio approach, there is liquidity.
Investment managers have to account for that.
Okay.
So they will normally have a schedule of investments to account for maturing investments or new developments coming to the pipeline, and also for inflows from clients. So they will provide that liquidity that actual everyday investors need.
So why should people invest in alternative investments as opposed to just stocks and bonds?
Well, there's a few reasons why, and back to my learning days on how to make a dollar. After you've learned how to make that $1, I think it's an interesting exercise to realize there's many ways of achieving that same dollar by taking less amount of risk. So one of the important aspects of alternative investments is that you don't need to increase the level of risk, for example, in the stock market, in your equity investments,
Yes.
to actually achieve the same results by investing in something that is not related to the stock market or the bond market.
So Coles Notes' version is it diversifies your portfolio,
Yep.
which is reducing your risk overall,
Exactly.
and there is the potential for a little bit more upside at the end of the day?
Oh, absolutely. It depends on which type of alternative investment you're looking at, but absolutely. There's returns that are usually in line with inflation plus some risk premium, all the way to really...
You can go aggressive growth and
yes, very, very
knock it out of the
attractive.
park.
Exactly, yeah.
Andreas, thank you so much for being on the show today.
Thank you so much, Sybil. Wonderful being here.
When we return, discover when and why to probate a will. Welcome back. Thanks for your letters, emails, tweets, and messages. Today's question is from Thomas in Calgary. Dear Sybil, unfortunately, my mother is ill and her doctors tell me it is likely that she will pass soon. She is my last remaining parent and her only asset is the cash in her accounts. She does not have any liabilities. I want to ensure that I am prepared to settle her estate. Do I have to probate her will if she doesn't have any non-cash assets? Many thanks, Thomas. Thomas, I'm sorry to hear what you're going through. It's never easy losing a loved one. When it comes to probating her will and or settling her estate, there's a lot of things that you do need to consider, even though it sounds very straightforward and simple in your case. Are you the only beneficiary? Are you the executor? Did she appoint you as the executor in her will? Those are some things that you want to make sure you have lined up before you proceed. Now, the whole process of probating a will is simply validating the will. It requires you to take the will down to the courts, apply for probate, pay a small fee. Part of that process is also notifying all next of kin, notifying any creditors. It's basically making sure that that will is in fact true, valid, and current to the best of your ability. Now, if you bypass that step and distribute assets, if somebody were to step forward laying claim to a piece of that money that is sitting there, claim to a piece of the estate, you would be liable. so you would personally have to fund that. Now, given that your mom only had a small amount of cash sitting in a bank account and no other assets, there's a good chance you will not need to go through the whole process of probate. The only way to be sure is to ask the financial institution that holds the cash. Every financial institution has slightly different comfort levels as it relates to distributing the assets. They don't want to be liable either. If they just take your word for it without a probated will, which is a more valid document than an unprobated will, and they accidentally let you distribute the money and someone steps forward, they're worried you may sue them. So there are a few things that you definitely need to look into. Now, the process of probate itself, if your financial institution requires you to have that, is really simple. There are lots of do-it-yourself kits available. You just need a lawyer or a notary to witness some of your signatures, and the probate fees are really quite small. In the province of BC, which is one of the highest provinces in Canada, there is no probate fees or next to nothing on up to the first $50,000. So don't worry about the fees and ask your financial institution, and hopefully you won't need to go through that step. And that wraps up this edition of The Wealthy Life, helping Canadians make smart financial decisions. Go to thewealthylife.com to become a member and receive free exclusive access to Wealthy Life workbooks, calculators, articles, and more to help you make the most out of what you have.